Hey traders, happy Tuesday. Welcome to the weekly outlook. Coming at you a little bit late on Tuesday, the 26th of May. This is going to be the week of the 25th through the 29th. It's important to note that this is going to be the last week of May to trade. We really haven't seen a lot of directional shifts over the month of April to May. Once we had our big drop in March in the stock market and a lot of currencies in the FX world, we had some great recovery, some risk on trading ever since, and a lot of that is continuing. So here's what I'm doing. I'm trading much smaller time frames, like 15-minute charts, 5-minute charts in the Forex market. I'm trading robots and automation. I'm very aggressive to protect my profits, and I'll show you why. I have some systems that are picking up some nice trades in either direction. I'm looking to buy, stay in the buy zone, sell, stay in the sell zone. If I have 30 to 50 pips of profit with some of my robots, I'm taking profit and letting my robot continue to trade and look for entries. So let's dive into the charts. Let's take a look at everything from the stock market to currencies to some stocks that I'm after, some stocks that I'm taking some profit on right now, and in cryptocurrencies as well. So let me quickly show the disclaimer. You understand there's risk in trading. Please don't trade the money you can't afford to lose. You know the deal. Now let's go into my Keep It Seriously Simple. I am going to be creating a playlist on YouTube, my YouTube channel. So you can find me, just type in my name, Chris Pulver. Look at my YouTube channel. Here it is. So there's my name, Chris Pulver, on Facebook, on YouTube, on Twitter, on Instagram. But my Keep It Seriously Simple, I have a video series with modules that are just about equity management, growth, support resistance, trend lines, equity management, margins, things like that. So good lessons, free education. Take a look at them, and I'll create a playlist so it's easier to find and keep that playlist rolling. Let's get into the charts for today. I'm going to go ahead and move myself down here, and let's talk charts. So oil still hopefully by this week, and I think there's a pretty interesting seasonal timing to this week. Coming into the end of the month, end of the week, we really don't have a heavy calendar. Here is the high impact news for the week. You can see that the calendar is pretty light. In fact, I would say nothing really sticks out that's major. We have the RBNZ Financial Stability Report after the rate decision a couple weeks ago. They kept rates the same at 0.25%. For Australia, we have private capital expenditure, preliminary GDP for the U.S., GDP out of Canada. Powell speaking for a virtual event on Friday. Like I said, we're heading into the end of the month, end of the week. So what I would suspect and kind of what I'm anticipating is maybe a similar movement, price action wise, like we saw back in April in the Forex market, where we saw some pretty hefty profit taking, some pretty nice, short-term reversals. And so certain currency pairs, so if you write this down, Euro Aussie, Euro New Zealand, Pound Aussie, Pound New Zealand. I thought that overall today, when I was trading today with students in my trading room, traders in my trading room, we were taking a look at the currency strength chart. And I really could not have asked for a better example of risk on versus risk off. So I made it a point to make sure that traders understand that when I'm mentioning this, I mean, what is risk on? What is risk appetite versus risk aversion or risk off? So right here, this is risk on. You have the New Zealand, you have the Aussie, you have the CAD, and the pound. Those are all risk on currency pairs. And so today the stock market was pushing bullish. We had a little dip in the SPY. It was bought. We're seeing some drifting up into that 70% zone, which I think is a really significant level for some retracements. I think that's a level of resistance that we're going to start seeing more wedge formations. I'll talk about that in a moment. But these are riskier assets. So this is what, you're looking at hard assets, some iron ore, some copper, some food exports. Like in New Zealand, we have milk, dairy, cheese, things like that. Canada, you have oil drifting up towards $35 to $40 to close that gap when OPEC and Russia had a disagreement on prices, and the May futures contracts finished in negative 30 cents. So oil has, U.S. oil has rebounded from negative territory all the way up to $34, with gaps to fill around $40. So that's risk on. And I think for this week, we probably see path of least resistance is to continue this way. We have some optimism getting priced into the markets right now with some COVID, this coronavirus and COVID vaccine discussion, whether we can, see some labs actually produce a vaccine within 12 to 18 months, which is super aggressive. Some might say unrealistic. I don't know if that's necessarily safe, but that's not my opinion. I'm not the scientific expert. I just think that it's never been done in the history of vaccines, and I think that's very aggressive regardless of unlimited resources. But for right now, the markets are looking at, bad news is not really that bad. Good news is great, and we're still on our way to this nice, healthy recovery. I think most of the U.S. markets right now are down single digits for the year. The average hedge fund went from 10 to 11% down to now 7% down. The major indices that were down 30% in March are now down single digits, like 7 to 9% respectively. So I mean, the recovery's been amazing. This is what risk appetite looks like. These are the currency pairs in the forex market that you see happening. You're looking at stocks. You get new highs on Amazon, new highs on Facebook, new highs on Netflix. A lot of that weight, a lot of those FANG stocks are carrying the stock market right now with volume. I've been a bit more of a bottom feeder and a bargain shopper in the stock market. I have taken some profit. I bought Ford, I bought GE, I turned a couple of bank stocks. Anything between 20 and 40% short term, I did take profits, and I'm looking to reapply those profits at the same levels or lower. Let's talk about the SPY really quickly. So here's oil that I expect to rally up hopefully this week, just continuing higher, getting up towards this $39 to $40 area. Heavy resistance, of course, at $40. So a couple of things I would suspect on oil, either path of least resistance heading into this week to fill that gap around $40. And again, if you're long on oil, if you've been long on oil, trap your profits. Or we pull back and have one more retest of previous resistance becoming support, and then another nudge to the upside as we head into summer trading. One thing to be prepared for summer trading wise is, we might have some volatility sparked with a second wave of coronavirus cases. If that's the case, we should be tracking that over the next 2 to 3 weeks. And I think that's important because now that things are reopening, we're looking at not necessarily a plateau in cases, but it's kind of not as important. It's certainly not on the radar like it was back in March. So if we start to see a resurfacing of cases, if we start to notice that there's more hot spots in the world, then again, kind of the uncertainty, the scares, the social distancing, the self quarantining, all those things come back into play, possibly again in the summertime. So we will see. But for right now, again, that's kind of being ignored as things are getting back to, new normal. But I think oil could still drift and should still drift higher as we head into summer months. If people are being willing to travel once again, flights are seeing a decline in cancellations and more of an increase in bookings. So that's a good thing. The cruise line is coming back, interestingly enough, and people are willing to drive again. So, that being said, there's a demand in oil, and certainly from $0, we're looking at oil prices recovering. And things like UCO and USO, these are some ETFs that I bought. Probably not the best investment for me, but I did take a chance on them. They were repriced as of March, and I ended up buying these both at single-digit prices. They were repriced with different because of the ETFs. They have futures contracts that decay, so I believe these were down between $2 and $4 respectively, and USO and UCO are now repriced around $25 to $30. So this is USO at $25.58. My break even in this one, I believe, is around $31, and then on UCO. This one I bought very inexpensively, and same thing. It's repriced around $22.83. Break even's around $26, $27. So I do need price to get back to those levels. I'm not looking to make an arm and a leg on them. Give me one second. I'm not looking to make an arm and a leg on these ETFs, but I want to get my money out of them, and I'm willing to hang on to it for that. Other shares that have been doing really well. So I bought Ford. Ticker is F, and I bought this one at $4.62. So a decent little return going right now. It's currently at $5.65. I'm looking at something pretty conservative like the high to low swing. We are just shy of that 38% pullback zone. So if we see price back into the $5.90, $6 plus, I'll probably end up taking some profit between $6 and $6.50. Consider that a $2 move in a $4 stock. That's pretty decent. So I will take some short-term profit and look to reapply. I'm hoping that shares like this, if I bought it nice and low, I take some profit up here and it comes back down and settles in at these lows, I will buy and be more of a long-term holder because Ford has a 12% dividend. Whether that is sustainable and stays or not, I don't know. It could certainly be discounted, but 12% gets cut to what, 10, 9, 8? Still certainly a higher dividend than most stocks pay right now. So that was a good little pickup, and I'm looking for some profit between $6 and $6.50. FHN, First Horizon National Bank. This is one that Tyson and I actually talked about in some of our Ask an Analyst sessions over the last month. And I did pick this one up at a great price at $7. And today, when I was looking pre-market and during the market, during the U.S. session, we were up above $9. So I bought it at $7, up to $9 and change. I went ahead and grabbed some profit of that one. I'm going to reload back around $7 on FHN. Trying to think of some other ones. SLV is another one that I'm looking to take some profit on. I've been holding since around $13 and $14 with several positions, and hopefully we will see this one drift back up into previous highs. SLV is what I'm trading. That's the ETF that trades silver. So silver has, I think, more upside potential than gold at this point. I'm looking for silver SLV to come back to previous highs, anything around 1765 to this high here around 1850. I'll take some profit because I did not take any profit earlier back here in 2018 when we rallied all the way up towards 18 plus. So I had some great entries here on $13.50. Did not take profit. I thought we were going to go up to an even 20 bucks and we didn't, and it came all the way back down. So I bought it again. I had positions over here. I bought it again at equal lows, and now I'm in kind of double the trade size, double the positioning, trying to get some profit back up at these previous highs. So SLV is looking good, FHN looking good, F looking good. My plan on stocks is this. If I have some decent 20 to 40% runs right now in the short term that I haven't really had to do much planning on other than buy low, take some profit, protect my gains, what I'm going to do is take those profits and apply them again. Now, whether that application is on the SPY, whether it's on a Vanguard ETF that follows the stock market, whether it's an index, or whether it is an actual stock or company that I want to buy, I will be extremely patient and trying to buy at the lowest possible level. One thing I am really excited about, I shared this in my trade room today. I have a broker with a TD Ameritrade. I have a stock account and Robinhood. Robinhood, I did it more for the convenience, but also for the last 6 months, I've been in a waiting list for fractional shares. So I can take, dollars as opposed to buying whole shares, and I can invest in whatever I want. So, for example, do I want to spend $2,200 on Amazon to buy one share, or do I want to take, $1,000 and add it to my Amazon stock? I like to do that. So to have that kind of piecemeal share price is really nice. So something like Amazon, Facebook, Netflix that you might think are a little bit expensive per share, you can allocate a dollar amount. I would gladly spend $1,000 on Netflix just to have it. And if it comes down to a better price, I'd spend another $1,000 to buy it at a better level. So rather than buying shares and trying to work out your share price, you can just say, look, I like this company. I want to be in this company for the medium to long term. Fractional shares are great. So that is one thing you talk to your stockbroker about. I happen to have Robinhood. I'm sure that you're seeing this more and more commonly. Robinhood is doing this. I know there's another one that's similar to Robinhood called Webull. That's Webull. You have those kind of roundup accounts like Stash and Acorn, and a couple of other ones where you have a like dollar subscription per month. Any costs that you have, like a debit card or something like that, gets rounded up, and the dollar goes into an account that you can end up investing in fractional shares. So there's ways to do it for really anybody to play the stock market. And the same thing is true. I mean, in Forex, you can have a little amount, you can leverage your account, and you can make money there too. But fractional shares are great for stocks, and you can buy fractional cryptocurrencies as well, and something like Coinbase having a digital wallet. So there's all sorts of ways to be an investor and a trader right now. So that's good stuff. Really excited about that. Like I said, that was kind of breaking news. Got an email alert on it over the weekend, so I started to look at my portfolio and how I'm going to take some fractional dollar positions and add to what I currently have out there. Let's get into currency pairs. So, like I said, risk on. What are we seeing? We're seeing Aussie strength, New Zealand strength, and CAD strength. So here's the Aussie CAD. Currently sitting right around that 91.80 yearly pivot. I sold it at 9100, sold it at 91.80. I'm looking for this thing to drop back down towards 91. Ideally, we come down into 88.50. There's a nice harmonic pattern that I can show you right here. It's an 8-hour chart. Let me get to that chart really quickly here. 8-hour on Aussie CAD. It's not US oil Aussie CAD. Here it is. Aussie CAD. So there's my harmonic pattern. I am looking for a little bit more confirmation bearish wise to give me some more confidence to add to this position. But right now with two decent trades in, my break even's around 91.40. So if we drop into 9100, I'm in profit. If we break below 9100, we're probably going from 91 down to at least 89 or 8800. This is a great spot for me to look for some profit right around that merge around 8800, 8850. So I'm going to hold on to this Aussie CAD a bit longer. And I'd like to see if technically the Aussie's setting up for a nice little basket trade and some basket weakness. So Aussie CAD looking for basket weakness, looking for confirmation on the shorter term charts to turn bearish. Okay, shorter term charts like a 30-minute chart, 15-minute chart, good structure on time frames like that for the currency world. That's Aussie CAD. Aussie Swiss, same thing. Aussie Swiss continues to push a little bit higher. That's fine. Let it push. Okay, let it drift. I've told traders, look, be bullish, be long, go with the flow, but be really protective. If you're long Aussie Swiss, look left. This is right around 6,500. Between 64, 6,500, I would be really aggressively protecting profits or not buying. I would just wait because I think the basket alignment is this. We have resistance and this drops back down. A lot of times in summer months, we establish a high or a low and then we start noticing some range levels. So I could see, Aussie pairs or pairs in general trying to find some highs and lows to stay, find resistance, find support, and stay in between for the next couple of months as we head into June and July trading. Okay, that is Aussie Swiss. Aussie Yen, same thing. We are bullish. Here's what my document looked like for my trading room. We had deployments on this. I talked about this in one of my robots, Right Trader Max. We've had this deployed on 15-minute charts with 15-minute direction, either trading just the 15-minute charts or trading the smaller time frames like the 5-minute charts, but using the 15-minute structure. So these are deployments that I've had going since last week. Aussie Yen, Aussie Dollar, CAD Yen, Euro Yen, Pound Yen, New Zealand Dollar, Dollar CAD. Every time that I'm getting trades running into 30 to 50 pips of profit, I'm trying to protect them. So all I'm doing is running a robot, monitoring my positions. And if I have 30 to 50 pips, I'm protecting them and then letting the robot continue to trade with pullbacks, with confirmation. If it stays in the buy zone, this robot continues to buy. If it stays in the sell zone, it continues to sell. And I will try to stay nimble, agile, flexible with whatever the alignments are giving me. So if a 15-minute buy zone changes to a sell zone, hopefully my robot doesn't take any more buy trades and it starts to just convert over into selling. Cool, let's get some sell trades. But I have this robot running right now because I do have a JPY prediction. I'm expecting the Japanese yen to get stronger. But if the stock market refuses to fall, if risk appetite refuses to go away, the Japanese yen is not going to get stronger. So rather than sitting on the sidelines waiting for the Japanese yen to get stronger, I can instead just buy it. I can buy the Aussie yen, I can buy the CAD yen, I can buy the Euro yen. I can go with this short-term flow in this near-term direction until it breaks. And when it breaks and it turns bearish, then we can start talking about the prediction to come to fruition. Okay, so this is the deployment. We've had some good trades so far. Really, since last week to this week, I've just been closing out trades with my robot, letting the robot continue to run, and that is 333 pips just since last week, just on a little automation. Pretty nice way to grab some pips that way. So that's Aussie yen, right? We still have a nice little channel to the upside. We're pushing back previous support resistance area. The real confirmation here is the bears having to break this wedge. Once we get on the right-hand side of this wedge, start to drift on the right-hand side, sure, we'll sell it. But why fight it? Why force sell trades if the market doesn't want to confirm? So I'm staying bullish right now, staying aggressive on protecting my profits and trying to get, better confirmation. So this is likely, drifting to the upside, more indecision coming soon, right? Where there's maybe some more limited upside, but with price going higher, momentum not agreeing with that, and possibly our relative strength coming into overbought territory, I think that winds up showing a really nice technical alignment for some weakness. And I see the Aussie basket doing very similar things on all currency pairs. So Aussie CAD, Aussie Swiss, Aussie Yen, Aussie Dollar, Aussie New Zealand, Euro Aussie, Pound Aussie. All those are lining up really nicely for Aussie weakness. Here's Aussie New Zealand. Aussie New Zealand currently trading at 107.20. I'm looking for this thing to drop back into 105. I'm not actively selling Aussie New Zealand, but rather waiting to buy it lower on a dip between 105 and 10300. Aussie Dollar continues to press a little bit higher. I modified my channel a little bit. Look left on your chart. Major support right here at current price. Now we're either going to see for this week maybe a bit more continuation to the upside, or this thing gets on the right-hand side of this trend line break and starts to head back down into 62.50. I do think that once we get on the right-hand side of this channel, that Aussie dollar drops to 62.50. We could go and should go lower. In fact, I wouldn't be surprised if we come back towards 6,000, but it's not happening yet. So I'm not going to fight it. I'm going to stay with it short term, protect my bullish trades, and then if we get a bearish confirmation, then I will stay with the bears. CAD Swiss. This is the third time that the CAD Swiss has tested 7,000. Now here's what I decided to do. I talked about this in my trade room today. I decided to take some short-term profits on this pair. So I had some trades from March that were filled at some levels over here. All right. I also added several trades on the way up. Now I took these trades into profit and closed them at 7,000 today. In fact, I closed it at 7,010. Now I want to get it up higher than that. I want to see the CAD Swiss run to 7,100. What I'm going to do is I'm going to decrease some of my margin. Okay, I'm going to take some of that profit off the table. I'm going to decrease some of my exposure. And if this comes back down, I will buy more. If this comes back down to equal lows, I will buy more. But right now I have some positions that I'm holding, looking to get back to 7,100 to 7,140. but I want to take about 7 or 8 positions that I had that I added. I want to take some profit on that. So I did that today at 70.10, but I'm still holding a chunk of profit, or I'm holding a chunk, a group trade going towards 7,100. So that's still my plan to stay long on CAD Swiss. If we see oil fill the gap around 40 bucks, we should see the CAD stay bullish on that as well. CAD yen, another one heading up into equal highs. Watch for major resistance here between 79 and 80. Round number resistance could be great. A nice easy resistance rejection point right around 80.00 on CAD yen. So in the interim, it's bullish. Stay with the short-term direction. Look for bears to kick in, past support becoming resistance. Anything in this little blue box between the red arrows, the blue box between 79 and 80, looking for heavy resistance to stick. Swiss yen, I'm going to go ahead and skip that one for now. Not much to offer there on Swiss yen, so staying out of that one. Euro Aussie. I talked about the Aussie basket looking weaker. So this is another one. Look, the Aussie's firm for today, but look at where we are. Disagreement with momentum, starting to get back in towards oversold territory. Not quite there, not confirmed yet, but definitely disagreement with momentum, which I like. Go down to a smaller time frame like the 4-hour chart. Okay, this might just drift a little bit lower. Okay, but what I'm looking for is something on my right trader system, which will be a buy opportunity on a 30-minute chart or a 15-minute chart. Here is the 30-minute chart right here. Okay, so what I'd like to see is price start to go sideways and see my sell zone catch up and see price get out of this going into a buy zone. So the 30-minute chart has, a little bit more passive movement than my 15-minute, but it's a pretty clean, it should be a very clean buy zone once it's confirmed. My 15-minute chart, pretty good as well, a little bit tighter, a little bit more nimble. But same thing, I want to make sure that price and ribbons and everything is confirmed in the buy zone. If we have some, indecision down here, look for possibly a falling wedge, and we start to see some end of month, end of week profit taking where the Euro Aussie starts to run to the upside. This actually happened really aggressively back in April. And we had the direction, we had the trade, we had the robot running, and it was just so stinking aggressive, it just didn't fill us. So it was right here. And I missed it. This is a great combination. I've talked about some of my classes the last couple of weeks. We have these pockets where the bears create them and show these inefficiencies that the bulls come back and find. It's amazing stuff to find balance in this market. So I had everything lined up for buy trades. We had a robot running. It was just such an aggressive move in a 48-hour period that we didn't get filled. Now I have a remedy for that. We have the ability to trade this time frame, but with smaller time frame ribbons, with smaller time frame entries. So we will not make that mistake again. All right. And it wasn't a mistake. We had the right direction. We just didn't have the right execution. So we can now change that so we can get execution on a smaller time frame while keeping the time frame of this chart confirmed. So I like the 15-minute chart direction. I think if we have a clean buy zone confirmed, I would look at 15-minute buy zone confirming and then trading a 5-minute chart. So I get 5-minute entries while using 15-minute alignments and confirmation. So kind of a good way to eliminate some of the noise, but have the precision for good trades. Euro CAD. Euro CAD, if CAD Swiss heads up towards 7,100, the Euro CAD will continue to drop. Write this number down, 1.50. I think the Euro CAD will drop towards 1.50. That means CAD Swiss runs up to 7,100. Euro Swiss, come on. Looking at Euro Swiss to get some legs to the upside and head into 107.50 or 108.00. So we've had this really nice run last week on, I think it was Monday or Tuesday last week. We had a really nice push. We have a really nice bull flag. Let's go. Come on, bulls. Break it. Show us what you're made of. Show us what you're working with. Get up to 1.0750 or 108.00. That would be amazing. And I'm hoping that we see that on the Euro Swiss this week or in very early June. The bar count that I'm looking at, the reversion trade I'm using, great stuff. It's a great probability. I'm just trying to get the push. I need a little nudge. Need a little love for that euro. Need a little drama for the Swiss. Give us something. Okay, but that's a good trade technically. Euro pound. We had a sell trade run on the euro pound. I did protect it. We had a little deployment to sell only. We had alignments on the 15-minute and 5-minute chart. We sold this one last week. A robot's in about 50 pips of profit right now. Love it. So let it run. You can take your 50 pips of profit, let the robot continue to look for sell trades. I'm trying to take this back down into equal lows around 8,700. So I'm currently short on euro pound, looking to get bearish and stay bearish towards 8,700. Ideally, we go lower than that into 8,500. Euro yen, staying with the short-term direction, which is bullish for right now. 15-minute chart, 5-minute chart, staying bullish and just staying with the current flow. Euro New Zealand, very similar to Euro Aussie. We've been pushing lower. We're coming back into equal lows. I'm looking for support. I'm looking for confirmation to start buying. Now, if I was a seller, I would be moving stop losses. Okay. If I was a buyer, I'm looking for buy confirmation on something like this. Here is my 15-minute chart on my right trader system. Do we get into the buy zone? We're not there yet. If we start to go sideways here, that allows my trend system to catch up, create a little bit more of a resistance point, and then price can break above that and start to transfer. Now we'll have stop areas down below. We'll go after runs back into previous highs and some of these pockets that have been missed along the way. So I think that the Euro New Zealand could certainly pop back up towards 8,000. Which if we're looking at for levels around like 7,750 or 7,800, that's a few hundred pips that I would look for. Again, if we have heavy profit taking by the end of the week, we will see that happen and look for that in the shorter time frame, like the 15-minute with the 5-minute alignments. Euro dollar can't break above 110. Can't break below 108. We have tons of pockets on this one. I really think this is still just going to stay stuck between 108 and 110. Here is the daily chart on price action only. Pretty straightforward. Let's go to the daily chart right here. There's euro dollar. So right now I just have a robot trading this. And look, for anybody listening right now and you're wondering, like, Chris, you're talking about all these robots. Look, I've been trading for a long time, okay? For 13 years now in the markets, and 10 of that's been full-time trading. Look, I know how I trade. And so I have robots, I have systems now that help me trade the way that I do trade, the way that I have traded, the way that I've been successful. So, I'm not leaning on automation like I can't do this myself. I mean, certainly if you're interested in my trading room and taking these trades manually, you can do that. It's just a lot more work, to just be following along and monitoring your chart alarms and monitoring your levels. It's just like anything else. It's just I want the automation because I want the robot to do what it's told to do. And I know the logic and I know what I should be doing trend wise or range wise. This is a range bound robot that I have running. It's called a Perfect Storm. It's just cleaning up pips on a 1-hour chart. It looks something like this. So I had this thing buying and selling at range highs and range lows. And so this on a 1-hour chart looks like a buy trade here for 30 pips, a sell trade, actually another buy trade here for 30 pips. I'd be right in that area. I'll use a straight line here. So we have buy trade for 30 pips, buy trade for 30 pips, buy trade for 30 pips. We have a sell trade. If that is 30 pips or that is 30 pips, otherwise certainly way up here, this area going for 30 pips. Then we have a buy trade going after 30 pips. Sell trade going after 30 pips, buy trade going after 30 pips, sell trade going after 30 pips. Look, this is about a 200 pip range. So lows, are 108 and highs at 110. We can easily grab 30 pips out of this. So buy it again, 30 pips. Sell it again, 30 pips. Buy it again, 30 pips. That robot's been doing that without my help. All I told it to do was buy and sell. So here is the structure on the daily time frame. Is price going anywhere? No, it's between 108 and 110. What a perfect environment to keep trading this sideways movement. So the robot does that for me, right? Is this the robot that I run in everything? No, I'm very selective on how I use this robot. Traders that are in this robot with me or have this system, for me personally, I use 8 currency pairs. And as 8 currency pairs that don't like the trend, that don't like to move, they're all low volatility. That's my preference with this robot. But in the last 12 months, it has produced around 40,000 pips for me. That's no joke. It's ridiculous. So do I have to monitor it? Yes, I have to manage it, because if this eventually leads to a breakout in a trend, then my robot gets in a little bit of trouble. So I have to trade small and I have to trade conservatively so I can manage my drawdowns if they present themselves. But that's why I pick certain currency pairs that don't like the trend, that don't like to have breakouts, right? That are low volatility, so I can work my way through them. But euro dollar is a great range trade right now. Pound Aussie. I said earlier, write these currency pairs down. Pound Aussie, I'm looking for the alignment to start going bullish. Okay, we have disagreement between price and momentum. We're getting into oversold territory with the relative strength. What am I looking for? Here is a chance for the 30-minute chart or the 15-minute chart to start turning into a buy zone. So currently I'm short and I'm in profit. I'm looking for more profits to the downside. If the 30-minute turns into a buy zone, I will look to buy it. So what I am doing right now is I'm being very aggressive on my stop, very aggressive on my entry. I'm looking to take some profit. All right. If this starts to come back into the buy zone, then I'll probably move my stop loss to break even. In fact, I might do that now while I'm in this video. So I think I'm going to go ahead and do that. I'm up about 40 pips on this currency pair. Let me go into pound Aussie right here. So I'm up about 40 pips. Let me transfer this over here, show the background with my break even. So there's a little trade. Let's go up into this average price and trade size. All right, so I'm up about 35 pips in this pair. Now, I'm going to go ahead and just take profit and let this robot continue to trade. So here is a close, take some profit, and then it can reset. All right, so now if it has confirmation to sell, it can sell. If it turns into a buy zone, it swiftly becomes a buy trade. So that was another 35 pips for the pound Aussie. I'll let this one just flow, right? But overall, from the higher time frame, I am looking for some end of month profit taking. We have equal lows right here. We're on the right hand side of the trend line. I think the better move and the bigger move is, once we can officially carve out these lows, we should be having a little bit of a run to the upside to get back into previous support resistance. Let's take a look at the higher time frame. Something along these lines. If we have range conditions as well, we haven't really established much of a, let me get that out of the way. We haven't really established much of a high other than maybe this level right here. I'll go ahead and take this horizontal line and right there. So if we have a break, retest, push, retest, something around 8,900 to 1.90. If we have short-term confirmation to buy, I think we can take this up from roughly 8,550, 8,600 all the way up back towards 9,000. That's 500 pips. That's worth considering a buy trade on a smaller time frame if we have confirmation. But currently, I have traders in and they're short and they are protecting profits aggressively and just being ready for a reversal and a U-turn because I think it's coming on the smaller time frames. So we'll be watching for that. Pound Canadian. Pound Canadian, here's my thoughts. As long as we're below 7,200, I remain bearish. Pretty easy. If we get back above 7,200, then I'm looking to buy it. But below 72, I'm looking to stay bearish, targeting 6,600. Pound Swiss, I think we can leave this one alone for right now. Yep, I'm going to leave that one alone. Pound yen, I'm going with the flow in the smaller time frames, looking for this one to do whatever it needs to do. We disrespected some of our, well, we really didn't. We had a pretty good move to the downside. It was bearish here. We took some profits, took a small loss, and then we're in profit over here. So at the end of the day, it's like it wasn't the greatest trade because I was looking for way more confirmation on the JPY, way more follow through on the JPY that didn't really happen. So that being said, I'm just trading shorter term, and right now it is bullish. We get back to equal highs, fine. We drift higher, so be it. There's highs, there's lows. We might have some range-bound trading going through summer months on these JPY pairs. So I'm fine just staying short term on that one. Pound New Zealand. Pound New Zealand, very similar to the pound Aussie. If we get some confirmation on the lower time frame, here is the 15-minute chart. 15-minute chart's a little noisy. So if we can see a nice little price pattern, something that maybe comes back down to these lows, I would consider looking for a really aggressive trend line this way to buy it. Okay, otherwise, I think the 30-minute chart is pretty smooth. Here's the 30-minute chart. This is, again, my right trader system. Here's the 30-minute. Okay, this goes from everything's in the sell zone. So if we get into open space where we carve out this low, get into the buy zone, I am a happy buyer into this level here. 2.0 all the way back up to 2.04, 400 pips. So between pound Aussie, pound New Zealand, we're looking at 400 to 500 pips of movement just in the near term that I really think can happen. So I'm looking for confirmation on that. Pound dollar, I like pound dollar bullish as long as we stay above 22.50. Okay, we're currently trading around 23 and change. Let me go to a higher time frame here on just price action. So this was past support and resistance right around 22.50. We broke it to the downside, then we broke back above it. As long as we stay above 22.50, I'm a buyer. Looking for the dollar to remain weak. As long as the dollar and the yen remain weak, I think this pair runs up to range levels around 26. So is this my favorite? No. So am I doing anything crazy on pound dollar right now? No. I'm kind of staying aside right now. But that's what my bias is. If we're above 22.50, I'd be more likely to buy. Okay, that's pound dollar. New Zealand CAD. New Zealand CAD just doing work on the old range. So this again is my perfect storm strategy, getting some indecision, taking some sell trades at highs and buy trades at lows. Here's my little range. So I'm buying the lows, I'm selling the highs, going after a total of 30 pips. It's been doing quite well. We've got all these little chunks of 30 pips, 30 pips, 30 pips. The last probably 3 or 4 weeks, this thing has produced over 200 pips. Not too bad for little 30 pip increments. So I'm going to let it stay that way. There's not really a lot to change structure-wise on the higher time frame. I would suspect that the New Zealand CAD is in this range and look for price to continue to push higher. Major resistance coming around 8,900 to 9,000. But here's that major range. We have low to high, high to low, low to high, high to low, low to high if it gets up there, and then high to low. So either way, I think this is still range-bound trading at its core. That's why I have something like the perfect storm picking up some profits for me. New Zealand Swiss, looking for a run into 6,200. Currently, we're trading at 59.83. Hopefully, on the right side of this trend line, this is going to stay bullish and stay free to run to 6,200. If you are long on anything New Zealand Swiss, make sure you're trapping some profits up here at 6,200. New Zealand Yen, same thing as the Aussie Yen. Short term is bullish. I'm staying bullish. Short term turns bearish. I'm staying bearish. Okay, I'm just going to go with those 15-minute alignments on New Zealand Yen. New Zealand Dollar, same thing. New Zealand dollar currently trading at 61.98, 62. I've said this for weeks. Critical spot. 6,200 could be the deal breaker for this New Zealand dollar momentum. If we do make a nice firm run into 62 plus, then we can go to this outer trend line around 64 and change. But if we see a major rejection and major indecision off of 62, then I have a feeling we're coming right back down to these lows. Okay, so we would look to be bearish below 6,000. We just never got there. Right? So instead, I'm looking to stay bullish right now. But again, if you are long on this little run right here, I would be moving and trapping profit, which I believe we did today in my trading room. Here's the New Zealand dollar. Grab 70 pips. New Zealand yen, grab 70 pips. The Kiwis had a nice run over the last couple of weeks. So last week to kick things off, this week as well, having some nice runs. I want to protect them. I'm looking for buys again because it's currently bullish and in buy zone alignments. If it turns into a sell zone, I look to stay with it on a smaller time frame. Dollar CAD. This one we deployed both directions. So currently you have a nice daily candle break to the downside. We have the support at 38.50 that broke bearish today. So this was Tuesday's trading day and we closed at 37.73. That's about 80 pips lower than support. So my question now is this a firm enough break to continue to go lower into this 3,600 pocket? If it is, if this happens, traders, then we should see oil go up to 40 bucks. So if oil is going to be destination $40, then a dollar CAD should be destination 3,600. So that's one correlation I'm looking at, which is why my robot is also staying with the current direction, which is bearish. Okay, oil looking for that creeping move back up to $40 and fill that gap. Major resistance ahead, but path of least resistance should remain bullish. Probably some heavy profit taking when it gets up there. Silver. We looked at SLV earlier, but here is silver at $17.13, looking to target these highs at $18.90 or $19.60. Previous highs back here in 2018 and 19. If you look at gold and silver. So gold is hanging out at $17 or $1,700 an ounce. I wish it was $17. $1,700 an ounce. Again, disagreement with momentum and price. I think that gold is likely going to drift lower. I could be wrong on that, but I'm certainly not buying GLD or buying gold at these levels. I would buy gold much lower between 1,500 and 1,365, not at these current prices. Otherwise, I'll just play silver, which is what I am in. Cryptocurrencies, Bitcoin. I know that Bitcoin had a little bit of a spill, not too bad though. We're currently hanging out at 88.45. Previous highs just over the last couple of weeks at 99, just around that $10,000 mark. If you are looking and following cryptocurrencies, write down Bitcoin 10,000 bucks or set a chart alarm at $10,000. If we can break a nice level above 10K on a daily or weekly chart, I think we are off to the races to the upside. Maybe this is not now, maybe this isn't immediate, maybe this is actually a bullish pattern that is setting up. Maybe this becomes a larger head and shoulders and we start breaking to the upside later. So, we've challenged that high back around, $9,000 or $10,000 back here. What was that high? That was the 2020 high in February, around $10,400. We dropped, we came all the way back, we challenged it. Now, that could be a really nice challenge, which gives us a head and shoulders pattern, which is bullish. So this is an inverse head and shoulders, where there's your left shoulder, there's your head to neckline, and we're looking for the right shoulder to form, then our neckline has to break. So if we break above $10,000, then hopefully we are in the clear for that reversal pattern to the upside, take out the high, challenge this high. And we're talking about, Bitcoin returning to the glory days of $19,000 and $20,000. It's been there before. I think it can get there again. So that's what I'm watching on cryptocurrency. So if Bitcoin gets a lift, expect Ethereum, Litecoin, Ripple to do the same. Some altcoins that I'm watching Tron, I'm watching Dash, I'm watching MTL, and there's a couple other ones. But I just try to follow the majors. That's my Coinbase account. Nothing crazy, nothing, no crazy ICOs or altcoins or anything like that. So that's it, traders. I want to keep it nice and short and sweet. I apologize for the delay. I'll get this out on my YouTube channel as soon as possible. Also on Twitter and Instagram. Here's how you can find me out there in the social media world. Just type up my name on YouTube, Facebook, Twitter, and Instagram. Also, I will be on my YouTube channel, and I'll be talking more about this, but I just started a podcast with my brother. We're calling it Brothers and Others, and it's myself and my brother. We're looking to have a lot of fun with it. It's just kind of personal growth, personal coaching for just life transitions and a lot of subject matter. We can be kind of subject matter messengers, and we can dig up the research and data-driven stuff. We can make good, educated decisions, and for all different career paths. And we're going to be bringing on guests and speakers from all different walks of life and all different career paths, and hopefully having something resonate with some listeners out there. So having some fun with that on the weekends. But meanwhile, it's all trading all the time, and good education, good robots, and looking forward to a great week to close up this month and have yet another positive month as we head into summer trading. That's it. If you have any questions, let me know. Send me some messages out there on YouTube. I've been trying to do my best to keep up with the messages and private messages. You can tweet me, you can IG me, or send me a DM on Instagram, that direct message on Instagram. So whatever platform works for you, but like the video, subscribe, pass it along, share it. I appreciate it. Thanks a lot for listening, everybody. Have a good week. Talk to you soon. Bye.